I think it's super obvious that rate cuts are probably coming.
With near 100,000 Bitcoin having been taken off exchanges in the last 30 days, 54,000 from Kraken, 25,000 from Coinbase, Ethereum supply seeing similar metrics, hitting an 8-year low on exchanges, with almost 5% of the entire Bitcoin supply being scooped up by ETFs. 34 ETFs now hold over 1 million Bitcoin, BlackRock leading with over 300 Bitcoin. With blue chip AI company Nvidia having a successful stock split, Apple announcing their continued foray into the AI space, Bitcoin and the entire crypto market is ready to pop. Why? Because the Federal Reserve is about to pump crypto and all risk assets to high heaven. Guys, smash the like button, support the channel. Let's talk about Bitcoin price and crypto markets. What happens next? So there's a Fed meeting coming up this week. Rate cuts have been expected all year. So far, that has yet to happen. Will the Fed cut rates this week? Well, Vegas odds put the chances of that happening at about 2.2%, down from 70% earlier this year. The CIO of Swan Bitcoin details exactly what is expected with the Fed meeting this week. Listen to his answer.
We have a pretty key Fed meeting coming up this week. What are you expecting heading into the week, and how does that affect your outlook for Bitcoin?
Yeah, I think it's super obvious that, ultimately at some point rate cuts are probably coming. If you just look at what happened in Europe, right? Europe is heading that direction. And I think ultimately that's what's going to happen. Timing is always uncertain, like with everything in the Fed, right? If we look back to 2020, they made a very strong stance that, if you remember, Powell was saying we're not even thinking about raising rates. And we now know where that ended, right? So I think the Fed is going to be the same thing. They're going to be saying that there are no changes in the horizon, that things are going to be stable, predictable, when we know, in fact, that's not the case. If there's one thing we know about monetary policy, that it's not stable, it's not predictable.
So the odds of a June rate cut are very low. The odds of a July rate cut, very low. These both had great odds near the beginning of the year. So most people aren't thinking about these rate cuts happening like they were at the beginning of the year. However, that doesn't mean they're not going to happen. There's a 50% chance that they cut rates in September. It's basically just a little bit more than a toss-up. Investors see a 50.5% chance of a quarter-point rate cut by September 17th, 18th Fed meeting, with a tiny 4% chance of a 50 basis rate cut. November, the odds increase. The odds of a quarter-point rate cut are 64.4% by November 6th, 7th meeting, which ends 2 days after the U.S. election. There's a 17% chance of a 50 basis rate cut by then. The final meeting of the year for the Federal Reserve is December 17th and 18th. Investors see an 86.3% chance of a Fed rate cut. The fact is, the U.S. markets are about to be blindsided by Fed rate cuts happening one after another as we get towards the end of the year. This is exactly the sentiment and analysis that politician and financier Anthony Scaramucci echoed in our interview from a couple days ago. You need to prepare for this. This is going to pump Bitcoin over 100K and altcoins a lot higher.
I have been in the camp that we're going to get 2 and possibly still 3 rate cuts. And people look at me like I'm crazy because we were 7 rate cuts and then we went to 0 rate cuts. I think the consensus now is 1 rate cut, but I actually think it's going to be more than. I believe that. Yes, I do believe that. I think they're going to come in the months of October, November, December. And I think what's going to end up happening is the Fed's going to move 25 basis points a clip at the end of the year because they're going to be behind the curve if they don't do that. The economy is weakening. You just saw the data that came out in housing markets. The housing market is slowing down. New mortgage applications, refinancings, slowing down. And housing, whether we like it or not, is still a very large heartbeat in America. And I'll just remind your viewers and listeners that jobs are created in the United States by small businesses. Big businesses generally don't create the jobs. They stay at a rough equilibrium in terms of quotas. Small businesses create job growth, and 60% of the small businesses are tied to U.S. housing. Just go down your local main street. You'll see a hardware store, sheetrock guy, plumbing guy. They're all there. There's a bank there that lends out mortgage money to people's houses. There's real estate brokers on that block. And if you look at it, about 60% of it, insurance agents. that are selling you property and casualty insurance, fire insurance for your home. It's all there. And when you have a slowdown in housing, you hurt those small businesses. And so the Fed knows this. And I believe that the Fed will start cutting rates. Will inflation be near 2%? And I'm going to tell you something, it already is. And I would ask your viewers and listeners to please go to truflation.com, truflation.com. And what that is a decentralized aggregator of pricing data from around the United States. And you'll see that that number is at about 2.3%. You say, well, why is the government reporting a different number? Well, there's an expression that there are lies, Aaron, and there are damn lies, and there are statistics. So lies, damn lies, and statistics. The government can make these statistics look any way they want, and they change the inputs. So we don't think it's accurately reflecting the drop. It's a lagging indicator, those CPI numbers are using, and we think there's a larger drop. And a result of which I think you're going to get the rate cuts. You get the rate cuts, you're going to get a tear in Bitcoin. You're going to get a tear in risk assets. And I don't even think they're that overpriced. There's a lot of good things happening in the economy, and the earnings have generally been good.
So 3 rate cuts, get a tear in Bitcoin, get a tear in risk assets.
Bitcoin's over 100,000 by the end of the year. That's my honest opinion.
Guys, make sure you get your tickets to Bitcoin Nashville 2024 at the end of July. 10% off with code Altcoin Daily. Details below. We'll be speaking there. This is the biggest Bitcoin conference in the world in the beautiful city of Nashville. 10% off with code Altcoin Daily. And the fact is, Bitcoin is ready to pop. Record low supply, record high demand. Rates will be cut probably multiple times going into end of year. This will make all risk assets explode, combined with the US election, combined with Bitcoin and Ethereum finally being desired and accepted by institutions. Subscribe to our channel, Altcoin Daily, for daily videos keeping you focused and up to date. Listen to the experts. Listen to the people who study this every day, work in the industry. Like here, it's obvious what's about to happen. Listen.
What is driving things overall, given that, we had our 2 big catalysts for Bitcoin, the halving and the ETF launches, they're kind of behind us now.
Yeah, I think, zooming out, as you mentioned, right? I think if we look at the big events of this year, the ETF is still, I think, by far the most important one, at least in terms of what it really means for Bitcoin in the long term, right? Let's put things in perspective. If we just look at the amount of Bitcoin that was accumulated in the ETFs, right? There's more than 1 million Bitcoin that are actually being bought by BlackRock, Fidelity, the major financial firms. So think about that. If we went a year ago and I told you we're going to have an ETF, not only we're going to have an ETF, but 5 months after the ETF is launched, we're going to have 1 million Bitcoin sitting at the ETFs on behalf of the clients from these institutions. People would think you'd be crazy, right? And the floodgates are open. That has been happening. It's by far the most successful launch of an ETF that we've ever seen. Just like if any new technology, right? In the beginning, we're all worried about it, but eventually, when you look at it and you really understand the value that it has, not only in an asset allocation perspective, as I said, but on a fundamental level, what this really represents as a savings technology to the world, then people really buy into the idea. And I'm starting to see a lot of that coming from institutions as well. Before, they looked at Bitcoin as a trade, right? They looked at the price like, oh, here's where the price is. I'm going to buy it, just as a trade. Now they're looking more into, okay, so where do I put this in my portfolio? Does it fit within real estate, long-term assets, hard assets, in gold, right? Which clearly, I think, signals a shift in perspective of where Bitcoin is in the cycle, and I think on the adoption scale. So I think the future is very promising to what we're seeing, given the adoption that we're seeing.